First red day is probably the most popular setup of Stacey Burke style traders. In this video, I will explain you when to really look for a first red day, what the setup behind the first red day really is, and why they very often fail, and I really prefer to counter trend them. This is part 2 of my current Stacey Burke plays series, and in this episode we will dive deeply into one of my favorite plays, the reversal into trend play. So stay tuned. So, short recap, what are the plays? Plays for me are a collection of setups in a specific higher time frame context situation. I found out myself after thinking about this for a long time that I structure the market in these plays, and this is exactly what I'm looking for. And each of these plays contains a sequence of different setups. So you really see the logic behind these setups, and you exactly see what are the signals and the situations and the levels you really want to see for that and how to trade them. So the plays are the major patterns that actually happen across all time frames. So we have 3 major situations. One is continuations, so that you really have a strong trend in one direction and it just makes one leg after one another. The second one is a parabolic play, where it's contracting or coiling, maybe also with peak formation, high, peak formation, low, or with a contracting coil, and then it either fakes out and reverses parabolically, or it breaks out and goes into range expansions. And the third one, where we discussed the first variation today, is the real reversal. Most people mainly hunt for those. The ones following me know that I don't do that typically. I prefer the other ones. But the one we are discussing today is actually one of my favorite ones still, because it is in the end a trend play. So here we are looking for a pump and dump. There is often the 3 days of longs and first red day also involved. And this can be counter trend. That's for me the reversal continuations. We will also discuss that. Not today, that's a different play. The play for me is the reversal into the trend. So that's a pullback that reverses back into a higher time frame trend. So let's look into it. So reversal into trend, how to trade that and what are we looking for? So this is always important to understand first what's the logic of such a play, of the setups, of the liquidity. What are we doing here? So why do we think this might go in our direction, and why do we have edge playing that? So in this case, reversal into trend, actually that's one of the logical situations how I defined my multi-timeframe system. This is a situation that's kind of a low-hanging fruit on a higher time frame. So that's the low-hanging fruit trade on the weekly template. I will show you that later. So you really want to have a downtrend where you have the week and the month pushing down. And then very often people start to buy the low and it pulls back up, and then it fakes out the high again, rolls over and joins the trend again. That's the overall logic. And we will break this down now exactly in what phases, in what sequences typically happens, and how you can trade that. So the rationale is that you typically in these downtrends you get pullbacks. These pullbacks can be fierce and short, so you can have a stop hunt. So that's where we want to discuss first red day also especially, and also first green day. And this is exactly the first red day, first green day fail. That's very interesting to trade. So if you have a strong downtrend and then you have a strong pullback in one day, and this might be a first green day against the higher time frame trend, then this is a very probable short setup, because people are buying the low. There is already a lot of traders trapped down here. And then they do the same on the other side. They trap the longs one more time. People are buying that, and then it's rolling over, and the downtrend takes all of them out again. And this is the liquidity you need for the next leg down. You always have to think about it. What is fueling the move? And here, this is a stop hunt against higher time frame trend, taking out profitable traders. So you have profitable traders pushing it down. Then you have people buying the low. It's coming up, a stop hunt, taking out the lower level shorts. That's the low-hanging fruit. And then it's turning around again. And then you take the liquidity of these counter-trending traders that bought the low, buy the breakout here, and then it's rolling over. And this liquidity of these guys, the long traders, you pull them underwater until they get stopped out, and then you have the fuel for the next leg down. That's the logic. So you're really following the momentum rollover here. It's rolling over across all time frame, one by one, maybe another pullback, and then completely going down. And then you also get the low-hanging fruit on the lower time frame, on the daily one. That's what you're looking for. And then the higher time frame trend typically continues. So what is the sequence and the signals to look for? So you have the first trade of this sequence. There's 3 trades I'm looking for. The first one is the real reversal into trend trade. That's this fake out high continuation. So you get the pullback into the trend, potentially a first green day. This can be a first green day, but it can also be already as 3 days of longs. So you might be a deep pullback with 3 breakouts into a week, and then it's rolling over. So then you want to see a first strat day. If it's just 1 day pulling back, then it's a first green day fail. So the first trade is a real reversal trade at the high of the week, potentially pulling back into previous week's low or high. We will discuss that depending on the weekly template. And then if this, we always wait, the one following me, until it fakes out the daily high. So previous day's high, you break out, you trap potentially in a deathline setup, rolling over, and then you take a short trade back down. Here you need to see how far, but this is the lower probability short reversal trade, because it's the first leg. You don't know. You always have to be careful with those, because there might be another one. The better one is the day after. So that's the reversal continuation into trend. A previous fake out high continuation. So the fake out high was on this day, and then the next day comes back in without taking the low, potentially retesting here the level again, the fake out high level, or also the weekly, and then you make the reversal continuation, and there you have a very clear target back to the low of the previous day. So this is the absolute best, the 3-star trade that I'm always taking if I get it. And then you often get, of course, another low-hanging fruit, the breakdown continuation. This is also, I mean, all these plays are overlapping. This is in the end the trend continuation play, but the breakdown continuation is in multiple plays. I won't discuss that too deeply, because in the end this is very similar, or also identical to the play we discussed last time. So if you're interested in that, just watch the last video. I will mainly discuss these two. So what are the multi-time frame signals we want to see here? So what's good is if we have a breakout close additionally. So if this is already coming, if it's not the first green day fail, so if this is kind of a multiple breakouts coming back into the trend, then it's always good if this is a breakout close, because then you have also a very strong level here that potentially serves as a rollover, because you know this is then out of balance. And if you watch market profile, it could also be an out of balance close with then a reversal down, as I call it. So if this here closes out of balance on the day, the next day makes a fake out high, and then it comes back into the value area of the day before. This is what you want to see. So then, this, as we discussed, 3 days of long. So if you get a pullback with 3 breakouts, longs that roll over, this might be nice. A first red day on the last one can be good. This is exactly the first red day you wanna look for. And what's interesting about that is that the first red day, it's the name of this situation, what people are looking for and what also Stacey is referring to. But interestingly, the first red day is the least important element of this setup, because it doesn't really matter too much if this day here closes red or green. If you have the fake out high and if we have a downtrend, I don't care much. If this closes green, then I still look for short. It's still a previous fake out high continuation. If it closes red, it might be a bit better, because these traders are then even more trapped. First red day always means that it closed red, and these guys that took longs here, the last ones, they are underwater overnight and in psychological stress. So if it comes up one more time, then these guys bail out of their positions, and then you get the fuel for the leg down. So other than that, you want day, week, and month aligned. That's my classic multi-time frame logic. So then, also important, we will dive into that. We discussed now the weekly and the daily template, the 3-session template. So the 3-session setup you want to see here is that you want to see, for example, 3 sessions of rise. So if this breaks down, that's a deathline setup, classic. But on the second day, here you want to see 3 sessions of rise rollover, or a parabolic session, peak formation high, peak formation low, blow off. So there are specific patterns on these days. We will dive into those and discuss them in detail. So that's the overall situation. So let's dive into it and see how you really have to look for that, what to spot in the chart, and how to trade it. So first, short recap, my trading process. So how I am hunting these trades, when I am looking at what elements. So I really split it down. Maybe here as an example, New York session, London session is similar. First hour, second hour, third hour. What am I doing? I develop my thesis in the first hour. I never take trades in the first hour. What are the signals I'm looking for? The 5-star signals. Breakout close, breakdown close. Inside day, outside day, day 0. Do I have a multi-time frame context, green or red? Here we are looking exactly for the signals we just discussed. Downtrend with a potential first green day against the trend with a breakout close, for example, or multiple days against the trend. And we will see also these parabolic trades. I mean, they are part of the parabolic place series, but often, as I discussed, the plays overlap. So you can have a reversal into downtrend that's at the same time a parabolic reversal into downtrend. So we will see that also in a minute. So here we look at out of balance markets, we look at parabolic signals, and we check if the multi-time frame aligning. And here in this situation, we will see we want to have trend predator, my indicator that identifies the context and the signals. We want to flag it reversal or reversal continuation into downtrend. So then after I identify that, the overall situation, I will also show you how to spot that on the daily chart. Then I put it on my short list. Then I look in the second hour for setup confirmation. So do I really have the 3-star or 2-star setup in the moment of the session when I start to look at a trade? So I start looking at trades end of second hour for entries in third hour. And then, of course, the setup needs to confirm. So I want the 8-hour range to be triggered, and I want the trend predator setup to flash the 3-star setup. That means that the multi-time frame setup across all levels is exactly in the right constellation. So do I have an MTF setup? If this is confirmed, then I go to entry screening in third hour, starting from 10 o'clock. I look for entry confirmation. So from 10 o'clock, I check the EMA ribbon. Do we really have a rollover? And I check the open box setup. We will dive into that. So the open box setup means I'm really looking for a fake out high. Sometimes in this case, better breakdown of the open box to confirm that it's really rolling over. So EMA, ribbon rollover, open box confirmation, then I have my trade. That's the logic. It's the same for all my plays, all my trades. And now we will go through this whole process and discuss it for this specific play. So the thinking process for these reversals into trend. Let's go through this quickly and then go into these elements. So the first thing we always look at is the monthly, weekly bias. And in this case, of course, we look at the daily chart with my 5-star screener. We will do that later. And we check if we have this weekly low-hanging fruit situation. So do we have a monthly, weekly bearish or broken down? And at the same time, it's pulling back up again. So do we have a breakout sequence coming back up into the level? Do we have potentially a weekly reversal template? So it's coming back up, day 1, day 2, day 3, midweek reversal or end week reversal. And then we check, is it a breakout close? Maybe. So it might be overextended in the pullback. That's helpful. It might be 3 days of longs, first red day overextended in the pullback. Then we might get 3 sessions of rise on the day within multi-timeframe 3-star setup here. So first hour breakout, maybe pulling in a 3rd session of rise, maybe then 3 hours of rise even. So maximum overextension, potentially even a parabolic breakout, reversal into 3rd hour, losing the levels, losing the open box. And then from there, we just check, is the 8-hour already triggered? Here it was triggered. Then open box, fake out high, breakdown. Here, fake out high. This would be the breakdown. Then everything is confirmed. And then we just look at a continuation trap. That means we want to see a 3 wicks pattern or a 5-minute fake out high that traps longs, in this case on the very low time frame, to make our entry safe and give us a nice trade. That's the thinking process. This is the real reversal one. The reversal continuation looks a bit different potentially, but this is one example how this thinking process could look like. So let's look into the weekly template. This is the generic weekly template, and I will show you the situations we are looking for in this case. So this, in our case now, would be the downtrend. So it's coming down, breaking down here, closing range. Potentially you get a fake out low, first green day here. And then if it's a strong downtrend, then potentially you already look for a short here. So this might be already your first green day fail, fake out high. If you get a pump and dump template, not a dump and pump. That's always the critical thing here. So open range, closing range, opening range, and then if you get a fake out high of the opening range with a pump and dump setup, this might be already your reversal into downtrend. If not, this might give a 3 push pullback within the week. So first breakout, second breakout, third breakout into midweek or end week, and then the rollover. Then this would be your fake out high continuation, reversal into trend, and this is the reversal continuation into trend, and potentially it's a high of week, low of week trade back to the current low of the week, or potentially even lower. So this also might combine into some other patterns, but let's look at that. Especially it often combines with parabolic situations. So here, this is a classic reversal week. So you potentially have here, as we just discussed, a midweek reversal already, but then it might also combine with some inside days or day zero patterns. So this would be the inside day pattern, for example. So it slams into previous week's high, puts in a coil, and then fake out high continuation. Then it's even stronger. So if here is a coil, and this fake out high continuation is a parabolic reversal into trend, then you have a combination of these 2 templates. A second one would be a real parabolic week. So this is exactly what I said before. So potentially downtrend, closing range breakdown, fake out low, opening range, fake out high. So this is a day 0 setup. And then potentially it never makes more highs here. So this is potentially already a first trade. Then you get an inside day, and here you see day 0, inside day parabolic, and then you potentially get the blow off into the downtrend again, and then potentially a breakdown continuation even, but that's the trend continuation trades. So these would be the weekly template patterns I'm looking for. So what does this mean? Where to play reversal into trend? So we really want to check the previous week's high and low all the time. What's the weekly range? Do we have 3 levels of rise within the weekly range? Do we have 3 days of longs, potentially a first red day or a first green day fail? So if we had a fake out high on the week before and it's pulling back down, then we might already take a continuation in the midst of the range, not at the low of the range, of course. So you don't want to trade into the low of the range. It's even better if you have a stronger pullback back into previous week's high after a fake out high, maybe faking it out again, or also faking it out within the week. So this is then also an overlap to the real reversals, but this is also for me more a reversal into trend. So if you're faking out the higher time frames at the same time, then you have a reversal that already has full multi-time frame alignment. So you don't have a reversal like an overextended reversal where the week and the month might be bullish, but in this situations they might roll over all at the same time and it's still everything bearish. So working back into previous week's high, or alternative, a breakdown in the week, and then you get a parabolic continuation, potentially here already a bit lower, so you don't necessarily get a pullback all the way to previous week low. So it might only do a fake out high and then continue, or as we discussed, potentially 3 days working back into previous week's low, 3 days into high, or 3 days of longs, breakout close, and then a rollover mid or end week from previous week's low as a real low-hanging fruit situation, continuing the downtrend. So that's the overall pattern I am looking for. So if we spotted the right weekly template and we are interested, then we have the help of my trend predator indicator if you use it. So here, that's what's on the chart. I will show you this later. Here's the context: reversal, continuation into downtrend, or reversal into downtrend. That's what you want to see. This is identified from day, week, and monthly bias. And then the setup that you want to see, especially then once you come to your entry, in this case would be, for example, a previous fake out high, continuation high of day. That means the previous day was already a fake out high. We are currently trading inside the continuation from the high of the day. This can also be a low-hanging fruit depending on the 8 hour. So is the 8 hour, are we inside the 8 hour range after a fake out high, or are we trading a 8 hour breakdown low-hanging fruit continuation on the day? And here you see already it would be a trend trade, and this is what you want to see, 3-star quality. So Trend Predator reads for you the whole context and setup situation of the chart, draws all the lines, and it has an algorithm that contains more than 180 different setup variations. And these are the ones I will show you them right now that you want to have flashed in this specific play. So what is it that exactly the indicator is reading for you? So there is the two different situation. One is the fake out high, continuation high of the day or low hanging fruit, reversal into downtrend. That means the current day, the previous day might be a breakout also. The current day is a breakout on the day and then fails again at the previous day high. So a deathline setup. So then turning into a fake out high. And then the indicator, if you have the higher time frames bearish, already shows you context reversal into downtrend. That's what the overall play and context is. And then the potential setup to be taken is a fake out high continuation at the high of the day or low hanging fruit. This is what Trend Predator should show you for this situation, for this setup. The second setup, the reversal continuation, that means the previous day faked out the high and currently trades inside, but is bearish because the fake out high is bearish, the higher time frames are bearish, and this is one of the situations where I also take trades from the inside. So this might pull up again, as we just discussed, and then Trend Predator shows you reversal continuation into downtrend as context. And for the setup, you want to see previous fake out high continuation either on the high of the day or then in a breakout situation as low hanging fruit. So that's Trend Predator. And what does Trend Predator in this case read for you to have it in mind? So this is always the check if you look at the chart to read the pattern. So what is the setup on the day? The 3-session setup. That's always very important to understand because this is the pattern that you're trading predominantly. That's the liquidity you need for your trade, and this then joins the higher time frame logic you build up. So there's always these two situations potentially. One is the high of day, high of session long squeeze, or we have a low of session, low of day parabolic. So these are more the reversal setups, as we just discussed. Reversal into downtrend, meaning potentially here Asia coming back up, breaking out previous day high. And then the question is, you have potentially 3 sessions into high failing, or it breaks out and you have 3 sessions trading above the previous day high, trapping volume, and then you have a deathline setup. That's even stronger. So the deathline setup traps all these long volume and then it rolls over. Alternatively, it works up 3 sessions of rise and the breakout is in the New York session, potentially a parabolic reversal, and then it loses level again and then collapses. So these 3 patterns, potentially 4 patterns, are valid for this reversal situation. In the reversal continuation, so if you have a previous fake out high, this is also valid, of course. So if it pulls back down deeply, potentially then has a first red day, as we discussed, and then it works back up again to roll over in New York. But you don't always get that. Sometimes the fake out high and the peak formation high on the day before was so strong that it doesn't have to come back again. So this then you often get a low of session, low of day parabolic. So this parabolic can be extremely parabolic, meaning from Asia at the high, it just trends down and makes lower lows all the time, breaks the previous day low somewhere in between, and then blows off to the low. That's one pattern. The second pattern is the parabolic session. That's my favorite. That means potentially Asia puts in a high, London put a low, London puts in a high, then it coils into the New York session, and then it breaks down and goes into a range expansion, and then you have this peak formation high, peak formation low, one range expansion as a potential target for your trade. And this is then very high probability if this is in line with your higher time frame thesis. So the entries, this is my entry logic without the open box. We will look at the open box in one moment. For me, this is important. I won't go through it in full detail. If you're interested in that, there is a video on entries specifically where I discuss that in absolute detail. For the reversal entries, it's very important. You always have to keep in mind it's a zero-sum game. So don't take what's obvious. You have to take the hard trade. So if everyone is thinking this might reverse here, then this is not to be taken. If it's too obvious and everyone goes short, then this might be the short trap down here. And then it makes the next leg up and you are potentially in a breakout continuation situation. So you really need to see, is this the trap? So pushing higher and already trapping a lot of people, and then this is the trap. But this is again then what you have to discuss with yourself. Do you want to make the aggressive reversal up here? I rarely do that because you really want to have a lower low. So it needs to trap. And if this is the trap, you really only know if this engulfed here and then pushes back up into the trap. And then you get here a continuation trap, and up here is the trap. And then down here you have the stronger trade entry. So keep it in mind. You can take those if you like the situation. If the time rotations align, the safer option is always if you break down the open box. We will discuss that now. And then take the continuation after a pullback. So open box, that's my entry logic. So if we have a 3-star setup flashed by Trend Predator, we triggered the 8-hour already and we are coming into 3rd hour. Then we check the open box. What are the open box patterns that are relevant for our reversal into trend? It's in the end, it's 3 different ones. So the first one is the most aggressive one. That's the open box reverse. That would mean the 8-hour, potentially also the daily, the last leg together with equity open. The open box is the 30 minutes after equity open, puts in a new high. Another push up potentially, faking out the high of the open box. And then you could already, in an aggressive scenario, once it loses the 8-hour, take the short inside the open box in a reversal situation. And then you trade it down, depending on the size of these ranges, back down to the open box or the 8-hour low or previous day low and so on. That's the first one. The second one is maybe even a bit more extreme. We just seen that. It might be that the open box breaks out first, then goes into one full range expansion. You don't take that because the higher time frames are bearish. So you don't take a long trade open box breakout into a downtrend, of course. But then if this at the 1x rolls over, then in a very aggressive scenario, you already take the short up here if you come into end of the session. So this might be 3 hours of rise potentially and then rolling over. Or you wait for it to lose the open box high. That would be then the second entry. Then the best one is the real breakdown, because there you are you trade the follow through. So this is what I do most of the times. So if you have an 8-hour fake out high and then come into the open box, or it's an 8-hour breakdown, then you get the open box. And then you want to see a clear breakdown of the open box. So 30 minutes after equity open traded, potentially you already have a new long trap. Then you get another minor long trap down here with a 5-minute wick back to the top, or maybe multiple wicks. We will look at that. And then you go to the one full range expansion down, or potentially into larger range expansion targets, depending on the quality of the higher time frame setups. So that's the variations. And once you're watching that, you always keep in mind if the multi-time frame setup is still there. So the multi-time frame setup read by Trend Predator, always look especially at the 8-hour and the daily level. So you really want to have the bias of the 8-hour and the daily confirmed, and then you take the entry based on the open box. Good. What are the patterns, the candle patterns? This is exactly if you zoom in then. So if you are coming into 3rd hour and everything we just discussed is already confirmed, then you just fully focus on the open box. So here, this would be one pattern that could be nice. So this is an open box high, for example. Here zoomed in deeply, 5-minute chart, multiple wicks coming up, faking out, engulfment. Then you could take the fake out high. That's potentially one. Or what I prefer is breakdowns. So you could have an impulsive breakdown like this. Then you always have to decide if you take the impulsive one right away. That's a bit more risky. But if I see something like a wick here, and this is correct with time rotations, then I like it. Or you wait for this consolidation. You see here multiple wicks back, another wick, roll over. Then this might be your continuation entry. It's deep down. It looks deep down, but the ones that know me know that I very much like to sell the low, because most people do the exact opposite. That's why it works so nicely. So breakdown retest, the last one. This might be a strong breakdown, and this is the risk if you take here the open box breakdown. If you do that, you need to be careful with your stop. So normally if you aggressively do that, then you have to do it very aggressively. So if you take it down here, this is too low. So you really have to take it right up here, and then you put your stop loss above this wick, because then this might happen. It comes down, the next candle pushes back up again. So what I often do, if I'm not sure, I wait for the next candle. And here you see already, if you have something like this, next candle pushing up, pulling in a wick, rolling over, this might be the next entry. Or here, if it's the next candle immediately pushes back up, then of course you don't have an entry. Then you wait for the next fake out high. So this is 10 o'clock, 10:05, 10:10, 10:15. Next sweet spot, fake out high, retest here, maybe even the VWAP retested, rolling over. Then this is here, the next candle rolling over. That's your entry, and then you know this is the continuation trap. There is another short-term long trap, and then you just go into the continuation and have a nice trade. So then final check for me, if everything else aligns, is the ribbon. So the EMA ribbon, especially for the 5-star setups. As you know, the Stacey Burke ACB ain't coming back setups. I changed the logic a bit. I'm calling them 5 stars. So this would mean that we have a breakout close in our situation. Then of course we check the fake out high level that's here, and you see here is a beautiful deadline setup. So multiple sessions trading up here, and then it's rolling over. Here you see the ribbon rollover, and then you would either take here the breakdown of the 8-hour here potentially. I don't know what the open box would look like here, doesn't matter, but we want to see the ribbon rollover, and then you take it here of the fake out high continuation, or then the low hanging fruit breaking down here, and then you have the previous breakdown continuation as we discussed. So ribbon, always important. Check it. You want to have it narrow, rolling over, and then you trade away from it. That's what you want to see. This is just a quick check. It takes 10 seconds to see that, and then you can switch it off again. So now as a summary. So we had a lot of theory now. I hope you could follow me. This is my overview of my different plays, and now we will go to the charts and look at specific examples. This here just as a summary. Last time we had the trend continuation. I discussed it in a long situation, but it's of course also short. This reversal into trend now we discussed as a short situation, but of course you can also flip it around, and in the long direction it's exactly the same. We will see this in the examples later. So here, how do I think about this plays? This is my playbook. This is the 5 different plays, and this is exactly how I structure these plays. So always, what is the signal I'm looking for? I mean, this looks a bit complex, but it really isn't. Is exactly what we just discussed. So you want to see a previous fake out high on the day, potentially after 3 days of longs. First red day would be nice, or a fresh first green day against the trend that might fail. Then on the weekly, as we discussed, you want to see a fake out high or a breakdown low hanging fruit situation. You want to be at the high of the week. That's always nice. A first red weeks or 3 weeks of longs on top could also be good. The monthly, this is just an alignment check. So this is critical. If I have this, I'm interested. This is nice. So if we are at the high of the month, if we have fake out high breakdown, first red month, 3 months of longs. So you don't necessarily always have the full alignment. You might also go if the monthly doesn't fully align, but the weekly and the daily, these two are critical. There's also situations where the monthly aligns, but the weekly doesn't. I will show you some examples on that. These are, you have to be a bit cautious. Sometimes they are okay, but they can also fail, of course. Then on the day, as we discussed, we want to be high of the day, 3 sessions of rise, death line, parabolic session or parabolic day. We just discussed that. And then intra-session, to have the final confirmation, we want an 8-hour fake out high or breakdown, open box fake out high breakdown, continuation trap, then we have the entry. So here you see how to read that lines, and this logic I have for all my plays. This is my playbook. This is my whole trading system. Looks complex, isn't. So let's look at examples. So as we discussed, there's 3 different situations or setups we are looking for. The fake out high, continuation, reversal into trend one, that's this one here, potentially with a first green day fail or a first red day for the next day. The previous fake out high, continuation, reversal, continuation into downtrend, that's this one here. This would be then after the first red day. The previous fake out high, continuation, and then we have the breakdown continuation into the downtrend. We won't discuss that as discussed because this is in the end the trend continuation play. We will now dive into these 2 examples and look at some variations, how to read the daily chart and identify the template. We will start with that, and then we will go through some specific trade examples that I really took over the last weeks for this play. So now starting with my 5-star screener template and a nice trend situation where we go through the days. This is a daily chart. You here already see my trend predator indicator working on the daily chart. Here you see the multi-timeframe situation, the current time frame, the previous one, the breakout count, and the first red, first green. And here you see the context. You don't see the setup because on the daily time frame, of course, you don't have that yet. So at the same time, I have the Trend Predator Fake Out highlighter. This is for free. You can use it. The link is in the comment. The Trend Predator Pro is a paid one, but you can test it 30 days free trial. So everything you see on this chart is done by Trend Predator Pro. This is the highs and lows of the month, the purple ones. The yellow ones are the weeks. And the green ones here, that's my fake out highlighter that highlights for us greenly the fake out lows. So this is exactly the days that we want to look at if these give us the reversal into uptrend, for example. So here, let's see, the month is bullish. We don't see that at the moment, but this was a breakout also. Let's start here. This is a weekly breakout, working back down. 1 breakout, 2 breakdowns, 3rd breakdown, fake out low. Once you come back to the weekly high here, this is a very nice fake out low continuation trade with the trend. So reversal into the trend. Then it pulls back down again after a fake out high. Then you have a fake out low, fake out high. This is the parabolic one. So this is a day 0 situation, and then you get another fake out low here, again back into the trend, reclaiming here the weekly breakout level. And you see here that was a very strong trade that then went into a low hanging fruit and even broke out of the week again. Then it goes on. This is normal trades. There is no fake out low. Here you have 3 days of breakouts. And then, interesting, here you get again a fake out low, very deep one. So that's a 3 days of longs, short end of the week, but then it does a fake out low continuation into the uptrend. So in this case, you see this is the short reversal against the trend. But for me personally, if you know me, what I absolutely would prefer is here the long back reversal from the low back into the trend, and then it closed up here. You see that's exactly the same trade size you get here. We don't see the timing now, it doesn't matter, but you see month bullish, week bullish, day fake out low, reversal into trend. That's exactly what we're looking for. And then you see here next day, same thing, breaking out, pullback, one pullback, two pullbacks, three, third pullback, fake out low, continuation into trend long. That's what you want to see. Then it goes on. Here you have another one. Breakout. Then this is a doji candle. That's why it's not green. But this is also a fake out low. Again, back into the trend coming up. No, actually, that's a bearish candle. No, so this was no trade in this case. This was no real fake out low, only a very shallow one. But then it goes on. This is no fake out lows, so we don't. That's no reversals. And this week we don't have it. Here we have the same pattern again. See, we have a breakout. All time frames bullish. One day down, second day down, third day down. Fake out low in weekly breakout. Massive continuation up to the high of the week, and so on. So this is exactly, and here it goes on. You know, here breakout, working back down, but here you want to be careful so you don't trade this into a weekly fake out high. So you really want to be above the previous week's high. That's what we discussed. That's the long situation. So you want to be at the low of the week with this, of the low of the current and potentially of the previous, but at least you have to have enough space to the previous week's high. So, and then finally it's turning around. So this is the logic, what you look for on the high time frame, how to spot that, in this case on the long side. So here a NASDAQ situation, where we really go to the trading level and look at the trade. Here you see it's pretty similar to what we just discussed. We will want to check here the 6th of October, this day here. You see month is bullish, breaking up, week is bullish, breaking out, and here we are consolidating in breakout. And here you get your fake out low. It's a doji candle also, so it took the high, took the low. It's a day 0, and then the next day here turns around. So this was a fake out low continuation. Let's look one level deeper on the chart, how I typically look at those and trade those. So here we already are on the 5-minute chart. So here you see it. It was a fake out high, and it came back down, did a deep fake out low. Here the deep fake out low level, and that's the monthly and the weekly breakout level, this one here. So that's previous month high and previous week's high, or pre-previous week's high. And then it came up. That's Asia, that's London. This in this case is a London trade. And you see here this is a parabolic reversal, as we discussed. We can switch on the open box levels here, open box range expansions. You see here what happened is that it broke down the open box with the open, but this was a trap. So this is exactly what you, of course, don't trade. So this is a breakdown, would be a short against all time frames. We don't do that. So we wait for the 1x, then it reverses, comes back in. You don't take this fake out low in this case, or you could even, but you see it's not even necessary, because here then it breaks out of the open box, breaks out of the 8-hour, but does a fake out high, and then works back into the VWAP, work back into the London open level, and then it breaks out here end of the session. 11 o'clock, 11:15 is a very nice time rotation that I really like. So here everything is confirmed. You would enter here, target would be the high of the day, high of previous day, sorry. Stop loss a bit deeper here below the London open level. Maybe you see that's an 80 pip trade. R7, that's a bit much, probably. Maybe to stop a bit wider. I think if you shoot here for an R5 with this 80 pips, that should be fine. And here you see now already reversal continuation into uptrend. That's the context. The setup is previous fake out low continuation, low hanging fruit, because we are breaking out. Trend trade, 3 stars. You lock in the take profit up here, the stop loss down here, and then you just let the trade run. The trend is in your back, is your friend. and then it just goes all the way and smashes through your target. That's exactly the trade we're looking for here. Reversal into the trend, and then you really just put your take profit at the previous day high, and you can be pretty sure that it's hit, and you can then easily also hold through these pullbacks because you know it will go there. So these are examples, and now look at real trades that I took based on this logic over the last weeks. So first trade example, 12th of September, the euro. Here, rejecting high of multi-week range. Outside day, fake out high, continuation, multi-time frame 3-star. Here you see reversal into downtrend, fake out high, continuation, low hanging fruit, trend 3-star. What's exactly what we want to hunt for. Entry 10.15. That's my major sweet spot in London after open box 1x already. D switch breakdown 10.30 would have been even better. Target weekly switch, weekly closing price down here. Reacted to open box 3x and single print, so I cut with R3.5. So you see my real entry, the red arrow. After it engulfed the closing price, and target would be down here after the weekly closing price in the end. That's the trade. So let's look at the chart, what this looks like and how this presented. So here you see it. This was the multi-week range. It did a fake out high here of previous week's high, also previous week's high, and of the previous month high. Pulling back down, reversing back up, and now you get a fake out high that joins again into this turnaround situations. That's why you get a reversal into downtrend here. So how did this present on the lower time frames? So we are right on the 5-minute already. So there you see it. London session also again here. You have an inside 8-hour. I also like that. You get a open box down here, faking out the previous day high, the monthly high, and the weekly fake out high was already up here. Reversal into downtrend, fake out high, continuation high of day, as we discussed it. You check here, open box, breakdown, pullback into VWAP, rolling over. That's nice. And this is 10.05. So this could already be your entry. I think I was even a bit conservative. So this could be already then your entry here, the stop loss above the VWAP. A nice target here is the 8-hour low, or just the closing price, or this 8-hour range. And then from here, you just let it run. And you see here, it fully follows the trend and just smashes into the low and into the take profit. So this was the trade. Pretty nice and exactly fitting to our discussions. So the next trade is a long trade, NASDAQ trade, fake out low continuation. Here, reversal into uptrend, fake out low continuation, low hanging fruit. 6th of August for NASDAQ. So NASDAQ day 0, fake out low, continuation into uptrend. First aggressive entry. You see here my entry. That was the breakout. We just discussed it. This is aggressive and risky because it might take you out. But I sometimes still do them because it doesn't matter. If it then comes back down, stops you out. I was pretty aggressive here with the entry. Then it stops you out, and then after the deep fake out low here and the bullish switch candle here reclaiming the VWAP and the 8-hour breakout level, I re-entered, and then still the trade was on until here the previous day high. So first aggressive entry 10 o'clock. Switch candle took me out. Re-entry after VWAP and first hour high retest. Here is the first hour high. You see these two levels. Retesting that, coming back up. Switch candle up. That's this green one here. Reclaiming the 8-hour. That's this one here. So here I entered it. target, the switch level up here, open box 1x. That's what I'm typically looking for. After 30 minutes, 100 pips are 4.5 minus the stopped out one. So let's look at the chart. How did this present itself? You see here month in breakout, the week in an outside week situation, fake out high, fake out low, coming back in. Here a deep daily breakdown, daily switch bar, daily fake out high, fake out low. That's a day 0. So that's parabolic situation on the week, parabolic situation on the day, reversal into uptrend. How did this present on the day? You see here, let's put on, I mean, the previous day high would be up here. That's pretty far away. Let's switch on the open box 1x. That's here. This was my target. The first one was stopped out. We discussed that. Then it came up again, and as soon as it reclaims the 8 hour, then here the setup jumps on. Reversal into uptrend, fake out low, continuation, low hanging fruit. Trend 3-star. So we switch on our long position. This was the entry. The target is the open box 1x, 100 pip, like this, roughly. Stop loss maybe a bit down there around the VWAP. Then you have an R5, maybe I think I had on a 4.5, so it was something like this. So here the entry, that's 10.35, perfect sweet spot. And then from there you just let it run, hit. That's 7.35, so exactly a 1 hour trade, 100 pip, R4.5, perfectly aligning with our discussion to the long side. So next example, GJ in a previous fake out high continuation. So here you have the reversal continuation into downtrend, previous fake out high continuation, low hanging fruit. So you see breakout close, very nice. That's one of the signals we want to see. Previous fake out high continuation, 2-star MTF, entry 11 o'clock. So this was already a bit late. We will check if this was perfect. Target, previous day low, iron fists. That means for me that I just lock in the target and don't manage the trade because I really liked it so much. Just held through the news. It was a bit risky. Target hit after 4 hours, R6. Sometimes you need a bit of luck. Haha. Good. So let's look at this trade. Here, what was the situation? You see here the month and the weeks push up. Then here, the weekly fake out high, it stalled. The monthly is here. It lost it. So this was coming down, downtrend. You see, it's turning around. And then you get a breakout close, a very aggressive one that broke up about through these levels. And then the next day we trade from the inside. It was a monthly rotation, so that's a real ACB 5-star setup. And then this just continues and makes this fake out high continuation back down. You really want this to lose this previous day high, of course, so you wouldn't short it as long as the day is in breakout, but at the moment this day rolls over, and you see here there was enough space to take this trade down, and I think I probably went out of this trade way too early, but still, let's look at it. It was a London trade. Here you see this is the huge A top, and this is the previous day high here. And I wanted to show you also that how you read this trend predator setup here. So at the moment it's a downtrend pullback. So we know downtrend pulling back, but it's yellow because it's still in a daily breakout. So it really reads it for you, and there is no setup. So for the setup, we even have an 8-hour breakdown. Inside 8-hour breakdown, that's also a very nice lower time frame setup. and you see this is a parabolic day. From Asia, London, it's just pushing down. So from here, open box, trading, but we are still above the daily breakout level, so we are not interested. So we really need to zoom in and see the candle patterns. And from there, we just go a bit further. Now it's breaking down, and you see from the breakdown it immediately jumps on. Here, reversal, continuation into downtrend, previous fake out high, continuation, low hanging fruit, trends, restart. That's the perfect situation. And from there, from this breakdown here, you typically just lock in your trade. Let's check that short from here with time rotation 10:35. That would have been the best entry. So I probably was not at the screen at the time and took it a bit later. That was also fine. You give it a bit of space, and then you just lock in the previous day low. That's the classic target. And you see here would have been an R9 trade. So just put in the low. Everything you want to see, breakout, close, roll over. You can also look at the ribbon for a moment. You see here the EMA ribbon coming up, coiling, crossing, and now you're turning away from it. That's exactly what you want to see. So this was such a nice pattern. I typically don't trade that pair, but this was so nice that I really had to take it. So here, entry, target down there, R9 trade almost, and then you just let it run, and it just melts down, pulls a bit back into the New York session, and then New York session just slams down, and here the New York Open hits target. Very nice trade. This is exactly what you want to see, and these perfect setups like this one here with the breakout close, they don't happen all the time, but maybe you get one or two of those a month, and that's enough. I mean, if you have a setup that gives you 2 times a month an R8 trade, I would say that's something you want to track, right? So final explanation, final example. I think we don't need to go to the chart anymore. It's enough if we just look at my journal entry. That's a previous fake out low continuation on silver. 2-star setup. A stop entry I took here with open box breakout 9:30 after M5 fake out low, target 8-hour high, 2x open box. After 15 minutes it reached the target already, 130 pip R4. So you see it here, reversal continuation into uptrend. You see the month was in fake out low, the week was in fake out low, the day in fake out low also. So the daily fake out low level is down here. So this was the fake out low of the previous day, somehow came up, open box, 10 o'clock aggressive entry here, 2x open box, take profit at these 2x level with 130 pip R4, and then the whole thing was done in 15 minutes R4. That's all you need. And here you see exactly how Trend Predator flashed the setup, reversal continuation into uptrend, previous fake out low, continuation low hanging fruit, trend trade 2-star. So that's it. That's the examples. I hope you liked it. This was the second part. There will be 5 parts. So next I will dive into the parabolic ones. Parabolic continuation and parabolic reversals. That will also be quite interesting, I think. So if you are interested in this type of trading, just go to the description box. There is a link, and there is a welcome package where you find all the information and also access to my indicator and everything I do. So thanks for watching, and have a nice day and nice trading.